Artificial intelligence is redefining investment management, transforming the landscape with data-driven precision and efficiency. In this comprehensive guide, AI Chronicles uncovers how AI investing, also known as robo-advising, is changing the way we approach investment strategies, from leveraging sophisticated algorithms to personalizing financial decisions. AI is at the forefront of modern investment practices. Let's dive into how AI investing operates, its benefits, and how you can start harnessing its power. The fundamentals of AI investment. AI investing leverages advanced algorithms and machine learning to manage investment portfolios with a focus on data-driven strategies. Unlike traditional investing, which often relies on human intuition and manual analysis, AI investing is anchored in data analysis. By processing extensive financial data, AI systems identify trends, predict market movements, and optimize investment strategies with impressive accuracy. At its core, AI investing is about harnessing data and technology to enhance investment decision-making. AI systems analyze vast datasets far beyond human capability to uncover insights and make predictions that guide investment choices. How AI investing works. AI investing operates through several key processes, starting with comprehensive data collection and analysis. AI systems aggregate information from diverse sources such as financial markets, economic indicators, company performance reports, and news feeds. This data encompasses stock prices, trading volumes, interest rates, and more. By analyzing this information, AI can detect trends and anomalies that may not be immediately visible to human analysts. The next step involves interpreting the data using complex algorithms. These algorithms are crafted to identify patterns and relationships within the data, informing investment decisions. Machine learning, a subset of AI, enhances this process. Unlike static algorithms, machine learning models evolve as they process more data, refining their predictions and recommendations with increasing accuracy. AI investing platforms employ these algorithms to create and manage investment portfolios. By assessing individual financial goals, risk tolerance, and investment preferences, AI systems develop personalized investment strategies. Analyzing market data and historical performance, AI suggests optimal asset allocations to maximize returns while managing risk. This process involves diversifying investments across various asset classes, such as stocks, bonds, and real estate, to balance potential gains and losses. Portfolio management and optimization. AI investing excels in managing and optimizing investment portfolios. Traditional investment management often relies on manual adjustments and periodic reviews, but AI systems automate much of this work. AI-driven platforms continuously monitor portfolio performance and adjust in real time based on market conditions. This ensures that portfolios stay aligned with the investor's goals and risk tolerance. Data systems use data-driven insights to identify when asset allocations need rebalancing. As asset values shift over time, the portfolio can become unbalanced. For example, if stocks significantly outperform bonds, the portfolio may become riskier than intended. AI automatically rebalances the portfolio by buying or selling assets to restore the desired allocation. This process maintains the portfolio's risk profile and strategy with minimal manual oversight. Risk assessment and management. Effective risk management is a crucial aspect of AI investing. AI systems evaluate the risk associated with various investments by analyzing historical data and current market conditions. This includes assessing the potential impact of economic downturns, geopolitical events, or interest rate changes on the portfolio. AI's ability to predict potential risks enables proactive management strategies. For instance, if an AI system identifies that a particular sector is likely to face difficulties, it might recommend reducing exposure to that sector or reallocating investments to more stable areas. This proactive approach helps manage risk and enhance decision-making. Personalization and customization. AI investing offers significant advantages through personalization. Unlike traditional methods that may apply a one-size-fits-all approach, AI systems tailor recommendations to individual financial situations and goals. This personalization is achieved through a detailed analysis of the investor's financial profile, including income, expenses, investment horizon, and risk tolerance. AI systems create customized portfolios based on these factors. For example, if an investor seeks long-term growth, the AI might suggest a portfolio with a higher allocation to growth stocks. Conversely, for those focused on capital preservation and steady income, the AI might recommend a portfolio with a greater emphasis on bonds and dividend-paying stocks. Automated rebalancing. Automated rebalancing is a defining feature of AI investing. As market conditions evolve, asset values in a portfolio can fluctuate, leading to imbalances. AI systems automatically monitor and adjust the portfolio to maintain the desired asset allocation. This involves buying or selling assets to keep the portfolio aligned with the investor's strategy. For instance, if technology stocks increase significantly in value, the AI might sell some of those stocks and invest in underperforming areas to restore balance. Automated rebalancing ensures that the portfolio remains consistent with the investor's goals and reduces the need for manual intervention. Ethical considerations and challenges. While AI investing offers numerous benefits, it also presents ethical considerations and challenges. One concern is algorithmic bias. AI systems are trained on data, and if this data is biased or incomplete, the AI's decisions may also be biased. Ensuring fairness and transparency in AI systems is crucial for maintaining investor trust. Cybersecurity is another challenge. AI investing platforms handle sensitive financial information, making them potential targets for cyber attacks. Implementing robust cybersecurity measures and data protection protocols is essential to safeguard against breaches and unauthorized access. The future of AI investment. Looking forward, the future of AI investing is filled with potential. As technology continues to advance, AI systems are expected to become even more sophisticated. Innovations in machine learning, data analysis, and natural language processing will enhance AI-driven investment strategies' accuracy and effectiveness. Emerging technologies like blockchain and big data analytics may further revolutionize the investment landscape. The future of AI investing promises more personalized financial planning and advanced strategies to meet individual investors' needs. Getting started with AI investing. If you're considering AI investing, here are steps to get started. First, research AI investing platforms to find one that matches your financial goals and preferences. Look for platforms with transparent information about fees, strategies, and performance. Many platforms offer free trials or demo accounts, allowing you to explore their features before committing. Next, consider your investment goals and risk tolerance. AI platforms typically require information about your financial objectives and risk appetite to develop a customized strategy. Provide accurate details to ensure recommendations align with your needs. Finally, stay engaged with your investments. While AI systems handle portfolio management, understanding the factors influencing performance is important. Regularly review your portfolio and adjust as needed to stay aligned with your financial goals. Thank you for exploring AI investing with AI Chronicles. If this deep dive into AI's impact on investment management intrigues you, hit that like button and subscribe for more insights on the latest in financial technology and investment strategies. Do you have questions or thoughts about AI investing? Share them in the comments below. I'd love to hear your perspectives and answer any queries. For more in-depth content on finance and technology, don't miss our other videos. Until next time, stay informed, stay invested, and catch you in the next video.